The market ends at its highest closing levels of 2025 amidst positive global cues over Israel and Iran ceasefire announcement, while the Nifty ends above the 25,200. The sensex closes near 82,700. IT and FMCG stocks were among the top gainers today, while select banking stocks were among the top losers.
HDB Financial's 12,500 crore IPO opens for subscription after receiving a strong response from anchor investors. The management tells CNBC-TV18 discussions with RBI on overlap of business with HDFC Bank are still on, even as its operations are completely independent.
And MCX stock surges in trade as UBS maintains its buy call, raises its target price to 10,000 rupees from around 7,000 earlier, while IndiaMART gets a rating boost from Nuvama as it raises its target price to 3,800 rupees per share. Meanwhile, MGL powers up after Citi's bullish commentary. Well, hello and welcome to Markets Forward, your go-to show where we get you up to speed with all the key data points you need to track for today's trading session and to set you up for tomorrow as well. I'm Nigel, and with me is Ekta. Well, Ekta, it was a rather good trading session today.
Hi, Nigel. Yes, absolutely. Well, we have, in fact, got all our viewers covered for the next 20-odd minutes with all of the big news and the key developments on Dalal Street. We have the top corporate voices and events to track. But let's kick off the show with what took place in today's market. And yes, it was definitely a very strong day. We closed above 25,200, the best levels in 2025, as the geopolitical tensions eased. So that obviously was the key reason. We had the advanced decline ratio, which was positive. We had IT stocks, which really led from the front in today's trading session. And what was interesting was that the small cap end of the market really gained, giving you a sense in terms of the kind of risk on sentiment we probably saw in today's trading session. So we had the small cap index, as you can see on your screen, was up around 1.5%, and the India VIX, which gives you a sense in terms of the volatility of the market, was down around 5-odd%, giving you a sense that there is some ease and some comfort which eased into the market in today's trading session.
Well, that's right. Well, here's what we have lined up for you for the next 20 minutes or so. We start off with all the top movers and shakers. Hormus will be joining in to help us out with that. Later on, we'll move to IndiaMART and MCX, which rallied in trade after bullish calls coming in from brokerage firms, while Dixon Technologies slipped in trade over a brokerage note. Last but not the least, we'll delve into the key market events you need to watch out for tomorrow's trading session. But first up, let's get to our first segment. We have Hormus, who joins us on the big wall to tell us all the top movers and shakers of the day. Hormus, take it away.
A lot better than what yesterday was. We opened higher, stayed higher, ended higher as well. So we'll take back a lot of positives from today's session. And one pocket that did really well today, apart from a lot of others, were the industrial stocks. And look at Kirloskar Brothers, look at Bharat Bijli, all of them seeing double-digit gains. KNR Constructions just a few minutes before close, winning a big 4,800 crore order, ending almost 9% higher in today's session as well. A lot of brokerage notes earlier in the morning, which led to a lot of these stock reactions as well. You just mentioned MCX, a 10,000 rupee price target from UBS, IndiaMART after an upgrade, Hyundai getting an initiation today as well. It's the highest level post-listing that the stock has made today. Indian Hotels as well, and Dixon on the negative side in today's session. A lot of other newsmakers, Exicom Tele approved a rights issue, was up 12%. Surya Roshni and KEC International winning orders. Reliance Infra 2 announcing an order win in today's trading session. And some stocks that ended at a 52-week high today. Look at EID Parry, 9% higher on that stock. Nesco, ITD Cementation, Narayana Health making new highs almost every single day. So strong going for all of these names. But the one pocket that continued to struggle today was defense. And profit booking continued here. Look at Garden Reach, 9% lower yesterday, 6% today as well. And a knock taken by BEL, Mazgaon Dock and Zen Technologies as well. Back to you guys.
Okay, all right. Thanks a lot for that, Hormus. Well, those are all the top moves of the day. But let's get our guest in. We have Mayuresh Joshi from Marketsmith India, who joins in, as well as Shrikant Chouhan, EVP at Kotak Securities. Hi, gentlemen. Thanks a lot for joining in. Shrikant, first up, coming to you, what do you make of today's trading action? We still didn't manage to conquer the 25,320, which is the recent high that we saw yesterday. But it was a much, much better trading session today in comparison to yesterday. What's your take? Where are we headed from here?
Yeah. Good afternoon, Nigel and Mayuresh and everyone. For Nifty, it is very clear that it is inching up gradually. Although there we are seeing good amount of volatility, the best part is that the market is closing on a higher side on a day-to-day basis. And as Hormuth said, yes, in one word, it is better to say that lot better as compared to previous close. Today's closing and today's formation is suggesting us that the Nifty is heading towards the levels of 25,500, 550 in the near term. The base part of today's trading session is that we saw good amount of put writing at 25,200 levels. So the supports have shifted from 25,000 to 25,200, and tomorrow is the day of monthly expiry. So broadly, I'm of the view that in case if we see any dip because of any reason tomorrow, then there we should look for taking some long bet in the market. I'm expecting on the day of expiry, we may see the levels of 25,500.
Okay, all right. Well, we do have a couple of stocks in focus. IndiaMART stock rallied after a bullish commentary from Nuvama and believes that the business is entering a new demand upcycle and that headwinds have bottomed out. Vinny is here to tell us more about what the Nuvama note said. Vinny, over to you.
Hi, so yes, a bullish note coming in from Nuvama, actually a double upgrade because they've upgraded the stock from a reduced to a buy rating. Target price has moved up from 2,100 rupees to 3,800 rupees for IndiaMART Intermesh. And Nuvama is positive on this one. Why? Because they believe that the company is entering into a new demand upcycle now. They believe that the management has taken the right steps in the last few years, especially reducing the competition coming in on the supplier front. So that is a positive sign there. Other than that, they believe the headwinds have bottomed out from the company and they expect improvement now coming in for the subscriber addition, specifically from Q2 and Q3 FY26 and onwards. That's when we'll see higher number of additions coming in for subscribers. They all, on the back of this, now they've increased their earnings estimate to 9% by 9% for FY26 and by 10% for FY27. Other than that, they've raised their target valuation from 22 times to 35 times. Mainly, all these reasons indicate that the growth for the company is now coming in and growth prospects are much better, and that's why they're positive on the stock.
Okay, all right, that was flying away. But the other one that was doing well was MCX. It hit an all-time high in today's trading session after UBS issued a buy rating for the stock. Vamakshi joins us with the key highlights. Vama?
Well, Nigel, it's a positive brokerage note that has come in from UBS. They have maintained their buy rating but increased their target price to 10,000 rupees per share from 7,000 earlier. What they're saying is that the company could post a very robust Q1, especially in terms of the average daily value. Now, as far as the futures ADV is concerned, in Q1 so far, it's seen an uptick of almost 50% sequentially. Apart from that, the option premium ADV is also quite healthy, seeing an uptick of almost 30% quarter on quarter, and this roughly translates to a revenue that is a trading revenue of anywhere between 34 to 35% growth sequentially and a net profit uptick of almost 50% quarter on quarter. Apart from that, they've also highlighted that the new product launches could support growth in the near term as well as the medium term. Conservatively, they're building in 3% revenue contribution from electricity derivatives by FY28 with potential for further upside. In addition to that, they believe that the silver options that they've just introduced could also see some very good traction. Given all of these factors, they've gone ahead and revised their estimates. They're expecting 26% earnings CAGR, and they've also gone ahead and revised their EPS estimates between 13 to 17%. The valuation for the company stands at 42 times FY27 PE, and they believe the markets are not fully pricing in the growth potential from introduction of new products, the operating leverage, as well as the benefits from higher volumes. So therefore, they have given a buy call, raised their target price to 10,000 per share.
Okay, all right. Thanks a lot for that, Vama. Well, meanwhile, Dixon Technologies was under pressure after Phillip Capital maintained a sell call on the stock with a target price of around 9,085 rupees. The note also highlighted that Dixon's largest client, that's Motorola, has begun outsourcing domestic volumes to Carbon in calendar 2024. Dixon, remember, was Motorola's sole manufacturing partner. The note also added another client, Longcheer, may also outsource incremental volumes to Carbon, which in fact could be a bit of a risk to Dixon. Remember, a couple of sessions ago as well, Dixon's promoter sold close to 2% stake in the company. Let's get a technical view first on this name. Shrikant, what's your take? Dixon, I've seen this in the past. The stock falls very, very sharply, but the recovery as well is quite sharp. How is it looking on the charts? And then we'll go across to Mayuresh for what he likes in this space.
Yeah, Nigel. Technically, also, if we consider its technical pattern, then it is forming lower top, lower bottom, which is concerning, and it is finding difficulties to sustain at higher levels. So, whenever we see such type of activity, most of the time the stock trades at the lowest level of the entire range. The entire range, if we consider, then it is between 12,000 to 17,000. In case if we see the stock is dropping to the let's say the levels of 12,500, there we should look for taking some contra bet of going long, because broadly I'm expecting stock to spend time within this range. But at this level, certainly we should look for avoiding of taking any specific long bet at current levels.
Okay. Mayuresh, what about you? Any technical call on Dixon?
Afternoon, Ekta. No, again, I think for Dixon, I think the structural improvement will only come through the ODM side of the business. Obviously, I think in terms of the earnings trajectory and the earnings matrix itself, they have been executing well over the past few quarters. So execution is not going to be an issue in terms of new clients, the new products that are getting into the PLI schemes announced by the government as a tailwind. However, I think if margin expansion has to happen, that has to happen with the ODM contracts, which is going to take time. They're trying to ramp up their ODM business. Otherwise, it's going to be that mid-single digit business as far as their core operations are concerned. And the valuations that the markets are giving to Dixon at this juncture largely incorporate strong earnings growth expected to come through. But I think the re-rating will only happen as the ODM component starts improving, which is obviously going to take time. So I think we will bide our time on Dixon as we speak.
Okay, all right, got that call then on Dixon, but let's focus on NSE. They have filed a settlement application with SEBI to resolve the co-location case as per sources. Now, if SEBI approves the offer, it could clear the way for NSE to launch its much-awaited IPO. Yash is the one who's picking up all of those details. He joins in to fill us in with all of that news. Yash, take it away.
Well, Nigel, this is the largest settlement offer put forward to SEBI by any company in the history of Indian capital markets. What we've been given to understand from our sources is that the National Stock Exchange has filed for a settlement application. This is in the co-location matter with market regulator SEBI. The amount or the size of this settlement application is about 1388 crore rupees. As far as this settlement application is concerned, what sources tell us is that it was filed on Friday last week. And it is on the desk of market regulator for its consideration. Assuming a situation where the settlement offer, which is in the co-location matter, gets accepted by market regulator SEBI, then in that case, market regulator SEBI's next move would be to give that all-important no objection certificate to NSE, which will enable the exchange to file for the DRHP of its much-awaited IPO. Also, simultaneously, in a situation where the settlement offer gets accepted, SEBI will have to move Supreme Court to withdraw its case against the National Stock Exchange as well. That will happen simultaneously, and once these two things are done, then, of course, it will be a normal IPO process to go about as far as NSE itself is concerned. We've written to the National Stock Exchange on this particular story, but they've declined to comment.
Okay, all right, Yash, thanks very much for that. As HDB's financials 12,500 crore IPO opened for subscription today, we spoke to the company, the MD and CEO G. Ramesh. He says HDB Financial operates independently despite being a subsidiary of HDFC Bank. He also comments on the draft regulations for overlapping business. Listen.
What we believe is that India is a huge opportunity for our business. And just to clarify to our viewers that we are a subsidiary of HDFC Bank, but we do not get any business from HDFC Bank. We are independently an entity. We don't get leads from HDFC Bank or any of the group companies. And that's been since inception. We run our own origination, our own risk management, our own collections, our own technology stack. Essentially, the draft rules came out about 8 months back, right? And the draft rules are really a document that's put out for discussion, which enables the industry to give its feedback. And the feedback has gone back to the regulator, and they're looking at the feedback. And as per the annual report, they're looking at the feedback. As I said, for us, the business is independent of the bank. right? And so very difficult to look at what might be the final circular at this point of time. The reason why we set up this business, independent business, is because we chase a set of customers which are fairly distinct from what the bank does, right? Or from what retail commercial banks in India do. For example, we have 19 million customers and 1,07,000 crore balance sheet, which means that our average ticket size is just about 1,65,000. We only do retail lending.
Okay, all right. Mayuresh, coming across to you, what do you make of this IPO? They've priced it actually attractively. The counter argument will be some of the listed players with maybe a little bit return ratios are available at a cheaper valuation on a price to book. What is your take first on the IPO, and do you believe there's any other stock that you like from this space itself?
I think they have positioned it well, Nigel. No two ways about it. And again, I think the management was very, very clear in the interview that they've probably given in terms of the business outlook going ahead as well. So there is a lot of scope as far as financial services as a domain is concerned. And that part of the business is nothing to do with the bank, but retail lending itself. And as disposable incomes improve quite significantly for India over the next few years, both urban, semi-urban and rural, I think there is going to be significant amount of growth that can probably come through. So I think very, very interesting IPO that is being put out by HDB Financials. I think within the same space itself, I think we continue holding some stocks like Chola as an example of the Shriram Finance as leading NBFCs, where our take is that the growth will continue for both these stories combined together based on the same rationale that we've already put through. And again, I think with better capital adequacies, with better managements, with a better corporate house at the helm, I think the kind of credit ratings that they probably get absolutely reflect in terms of financials. So I think in terms of cyclical times, I think they know how to sustain their business, and in good times, they know how to ride their business. So I think Chola Shriram might actually do well in an upside.
Okay, all right. Well, on that note, Mayuresh as well as Shrikant, thanks very much for joining in and taking us through all of your perspective. We need to take a short break on Markets Forward, but more coming up. Stay tuned.
Welcome back. You're tuned into Markets Forward. Well, let's go across to all the corporate voices that we had today. First up is Tata Motors. The management expected the demerger of both Tata Motors and its commercial vehicle business to be completed by year-end. They added that it expects healthy single-digit growth in the commercial vehicle segment in FY26. And that's not all. It's more bullish on buses and vans. Further, the company is working on an alternate plan as 20% on its commercial vehicles exports goes through the Strait of Hormuz. Commenting on the rare earth curve, the Tata Motors management says there is no production cut expected over this, at least for the next few months.
Next up is REC. The management doesn't expect a significant impact on the balance sheet, adds additional provisions will not impact after tax, further maintains NIM's guidance, maintained in the range of 3.5 to 3.75%, further expects its loan growth to remain around 12%.
And before we wrap up on the show, let's get you all the key market events you need to track. Vama is joining by to tell us all of that. Vama, take it away.
Well, Nigel, we'll be keeping an eye out on a lot of economic cues tomorrow. The US GDP numbers will be out. Apart from that, also keep an eye out on the initial jobless claims. As far as board meetings are concerned, we'll be watching out for Bank of India. They will be considering their fundraising plans. Nestle will be considering a bonus issue of shares. So both of these stocks will be in focus. Keep an eye out on a couple of IPOs that will close tomorrow, which includes Kalpataru, Globe Civil Projects, Ellen Bari Industrial Gases, and one IPO actually opens for subscription, and that is Indo Gulf Crop Sciences Limited. So we'll be watching out for all of this tomorrow.
Okay, all right. Thanks a lot for that, Vama. Well, on that note, we'll wrap up on this edition of Markets Forward. We'll be back on the other side with more news and updates. Don't go anywhere.